That is so upsetting to me, because if this industry is going to exist into the future, it's going to exist because people think through their offering through the lens of the client and not through the lens of the advisor.
Oh, hey, everybody. Welcome to the Advice Business Podcast. Hello, Kelsey.
Hello, Zach.
Hello, Newman.
It's always weird when we say hello as if this is the first time we've
been in the middle of
hello.
a conversation.
Yeah.
It's totally natural and normal, and one day we'll be totally comfortable doing it. Do you
relaxed.
remember we are a day late to... Do you remember what yesterday was?
What was yesterday? I know
I'm
you
not
told
even
me.
asking what day of the week it is.
I don't even know
specific.
What day it is today.
Yeah,
I remember you telling me something interesting.
It was International Podcast Day.
Podcast Day. And that was 2 days ago. We were supposed to record. That was Tuesday.
Do you know what Thursday. 2 days ago was?
I would have gotten it right.
Podcast Day. Yeah, it was.
Yeah, because we were supposed to record and then we couldn't.
Okay.
Because my computer was broken.
If I had said 2 days ago, you would have gotten it.
I would have clearly known, yes.
Well, yeah. So we're 2 days late to recording. We were supposed to be recording on International Podcast Day. How long have we... someone today, I was having a lunch meeting with somebody who's hopefully a new listener, we'll see, was asking me how long we've been doing this, and I couldn't remember. How long have we been doing this?
1 year and 10 months. Well, almost 2 years if you count how long we've been recording, but it launched in January of 2024.
Wow. That's amazing.
So we're
here.
like legitimate podcasters. I can't even believe we're still doing this. I fought this so hard that I can't even believe we're here.
Yeah. Well, it's still every day I have to drag you back into it when we record.
It's always fun once we're here. It's just hard to set aside the time and the,
Yes, it is.
Mental bandwidth.
It is. Yeah, so I feel this far into it, I think we can legitimately celebrate and appreciate International Podcast Day. We're legit.
Yeah, go us.
Okay, well, now that that's out of the way, here's to one more year at least of the pod, and hopefully many more. What are we talking about today? We've been having a lot of conversations. I think this is kind of a good continuation of our conversation after Future Proof and AI and the value of advisors and all these different things. To me, the jumping off point is advisors have to do so much. Our jobs are really, really hard. If you really just simplify it down, it's the practitioner / expertise side. And then it's the human engagement, deep conversation, in the weeds, humanness stuff side. And that's before you even get into, you also have to be running a business, and you have to run a P&L, and you have to have compliance and, all the operational pieces. But if you boil it down, oversimplify, it's like you need to be an expert as a practitioner, and you need to be a really good human in a bunch of different ways. Is that right? Is that like a fair summary of who advisors are?
I think so. I mean, who advisors are, I think that's what's being asked of advisors, I guess.
Who are we?
Yeah, I think that's what's being asked of advisors. That's kind of like, I guess, the expectation, in our opinion. I don't think that's who every advisor is. There's so much variation. We've talked about this 100 times, but yeah, I think so. I think the human part is a big thing, but there's so much technical knowledge and expertise. And then there's actually, if you're independent, there's actually like running a business. And even if you're not, you're, running your book or however you want to refer to it. So yeah, I think that's fair. I mean, you're an advisor, so I feel like you can define it.
I think so. I would say that that's how advisors, I guess at least for me, would pride themselves on what we do and who we are and what our value is to the customer is, yeah, we know what we're talking about from a practitioner standpoint, and that sort of table stakes stuff we can do for you from a financial planning perspective. But, part of why you choose to hire us, maybe over another advisor, or certainly over, sort of any do-it-yourself approach to financial planning and investing, is that human empathy side, and the fact that those two sides are woven together, right? Like, how do you actually drive good experience around the practitioner stuff and the execution of a financial plan is based on deep understanding, asking good questions, listening to the answers, conveying your understanding, asking the next deeper question, deepening the relationship, building trust, et cetera, making sure you're talking to not just one person in a household, multi-generational trust building, et cetera. But where I think we wanted to go is really to convey, again, how difficult it is to get those two sides right simultaneously. And I think sometimes we see either you're really good at the expertise side and maybe struggle on the humanity side a bit for certain
Mm-hmm.
reasons. Or I think where we really want to pick apart is the inverse, which is you're actually really good at the humanity side, and we can kind of spell out what we think we mean by that in more detail, but where to some extent you've unintentionally stepped over some of the expertise side. And that is a challenge, right? If you're going to be able to deliver on better, more human experience, it kind of requires that you're nailing it from an execution standpoint in financial planning. But to be specific in how we want to talk about it, given what we do at Seeds, the investment management piece of what we do, right? Not allowing ourselves to kind of step over foundational value propositions of what advisors can/should be doing within investment management to get to that more human, personalized, deeper experience around investing. That foundational stuff has to be there. So that's what I think we wanted to talk about.
Yeah. Yeah, kind of how the ask for more humanity, and you hear this all the time in the industry. So human first, there's this big movement around human first, and how do you show up as a human, that whole movement that I think has been gaining in popularity for some time. And then how does that meet up with the expertise? And I think we see advisors who lean very heavily into expertise and who struggle on the human side a little bit more, or they're less comfortable there. And then the opposite, where there are advisors who are very relationship based, and most of what they do is in building that relationship and hopefully providing comfort and consultation to their clients. But the expertise, is not where building more expertise is not where they necessarily want to spend time. The investment side of this, I think, is much more complicated than the planning side of most businesses, at least for advisors, because I do think, and we said this in our last conversation, we talked about a little bit how, like, in planning, if especially if you're charging for a plan, or if there's a deliverable, that requires a certain level of expertise to even be able to create that plan and deliver it and help them execute upon that plan. So I think that is different, where we see a lot of variation in the investment management side of, like, what does it mean to even deliver a good experience and a good solution or a good service as it relates to investment management. So we can definitely start pulling that apart. But do we want to start with, where do you want to start? Because this is such a big, broad topic. So what do you think makes the most sense?
I actually think double click it, like, just to jump into being specific, using investment management as the thing to pick apart what does it mean to be more human and a more human experience around the investment management part of what advisors do. And then what is the expertise side, and how do those two sides need to coexist, and where we see advisors struggling? Because I think we can go really big picture, like, how does this take shape with broad financial planning? But because, our focus when we work with firms is this investment management layer within the context of overall financial planning, I think that's what we know best. So to really pick that apart. So I would say, to start, like, when we say more human and a more human engaging experience around investment management, what do we mean by that? What is sort of like the manifestation of that? Maybe start there.
Yeah, it's funny. I didn't think of this until we actually hit record, so I just pulled it up. But I saw a post from Brendan Fraser a while back, a couple of days ago, and he was quoting Carl Richards from some speaking event.
And now you're quoting.
And now I'm quoting. So I'm quoting Brendan, quoting Carl.
Perfect.
And at least I'm attributing it this time, because my go-to is to just remember a quote and not be able to attribute it. So thank you, Carl and Brendan. But the quote was, you're no longer getting paid for solutions, you're getting paid for presence. That was the quote. And then Brendan added, of course, you still need the solutions, but the solutions are everywhere and presence is rare. So this goes back to what we were talking about before we started this conversation, I think. And I don't know why I didn't think of it before, but I think for me, I've spent a lot of time thinking about what we actually mean. Like, what does good look like? What does being more human mean? And when we put on our website, and the first thing you see, which can make people kind of confused about what we do, when you hit our website, is the future of investing is human. And what does that even mean? I've spent so much time thinking about that because it's such a big statement and it's kind of confusing as to like, what are you saying? Right. And I totally understand that. But I think that's what it is. Like presence. What does that even like? How do you show up and just be present with someone? Of course, your expertise is required to make that a valuable interaction in terms of like the financial life of your client. But what enables a person to show up and be present with another person? We were just talking about remote right before this. That's why this came up of like just the difference between being in person with someone, like with each other. We're recording this with each other. There is a very big difference of when you and I are sitting face to face present with each other than when we're doing this in this format. Actually, recording podcast is probably the most present we ever are because when you're at your desk, you're not. You're distracted. Slack is going off. Emails are going off. You could technically be proofreading something or approving something or doing a million things.
I've never done that.
Yeah, we call it out all the time, and it's it's a problem. But even in regular life, phones, there's just so much. It's so rare, and Carl is so right about this. So I think that really like encapsulates what I think a really good human experience is. And then when you tie investing into that, investing, in my opinion, is way harder. I think it's an uphill battle for advisors because of how few best practices exist, not only around how to allocate a portfolio for a household, like allocate an entire household, allocate an account, but then also how do you then manage it over time and trade it over time? There's an insecurity there, and there's a history of sales. There's so much that we could unpack here. There's a history of selling products. There's a history of selling alpha, manager selection stories, like repeating what you heard from the manager in their webinar last quarter. There's so many weird things that it's kind of like you're on shaky ground. And that's the biggest thing I think that comes up for me is in order to be present, you can't be on shaky ground about what what you're talking about and what your offering is and how you serve. And you should be coming into that meeting confident that you have a really great service experience and a really great solution for any client who comes in your door, basically. And I think that's kind of like the root of where I am with this, with defining this. and hopefully that makes it more granular.
And I think with presence, what that also means is in its simplest form, it's converting investment management into an advisor-centered narrative. And that can then mean all the things you just rattled off about it's really product-centered, or it's sort of like market philosophy-centered, or expertise-centered, or credential-centered, whatever. But it's about you as the advisor, as opposed to being human-centered, meaning your client-centered. The story is actually built around them. And the only way to build a story around them is to ask questions about them. And the investment management experience, traditionally, that, again, hasn't been the approach. So you can't build a narrative around the client as an investor if you know nothing about who that person is as an investor. So, okay, what does that then mean? What should I know about this person to then be able to convey understanding, which is part of the humanness of it, right? We say it all the time, people want to be heard and understood. The only way that can happen is you're asking enough questions, the right questions, and then conveying your understanding back to them before you even connect the dots to what a tangible solution on the other side of that would be. So what are the questions? What are the things that actually make sense to understand about an investor? Seeds has answered that, and we already know it's not a complete answer yet. We're continuing to chase what the perfect answer, the optimal answer to this really is. But for now, it is, how do you think about investing? What does it mean to you as a process? How do you think about your goals and how a portfolio is going to help you achieve those goals, short and long term? How do you think about participating in the process of investing? How much detail, which details do you want to understand about a portfolio or not? And then this whole dimension around preferences and interests, which again, in particular, has been an area that the industry is just not asked about really specifically. So values, are you motivated by them and how they're going to be brought to life in a portfolio or not? And if you are, how so? I don't think advisors, we should make presumptions. And again, it goes back to like centering the narrative on us. A lot of clients don't know it's a choice because we don't ask the question. If you ask the question, what is their answer to the question? How do they think about bringing specific values to life or not? And then other things like thematic interests, right? What is this person already, if they went onto a robo platform that maybe actually through fields in a discovery process on an app would ask about thematic interests, what boxes might they check? They would prefer a human interface, at least for now, to be the interface that is helping to gather that information so that there's a human that's helping them feel heard and understood. But you need to ask the question, right? Maybe this person is not motivated by any thematic emerging trends that they could invest in, or maybe they are. And now I know that. So the point is, I think to answer the question of what is the humanness around investment management, it's the presence, it's the asking of the questions, what are those questions, and then reflecting the answers back. And then that is therefore leading you to start to tell a story about a portfolio and investing that is now centered on them. So that's the starting point. And to your point, like that's before you even get to the nuts and bolts, like what is in this portfolio and how is my expertise about investment management going to make sure I'm actually executing a portfolio the right way. That's the humanness side. So that's how I would sort of lay out the one side of the algebra equation is that framework.
Yeah, but just to be clear, I feel like I keep saying this and no one gets what I'm saying. I really feel like no one gets what I'm saying. Yes, the trade-offs and how you do it in the models, all of that comes after. But what I think I've realized, at least over the last year or so, that we've been framing it more this way and thinking about it more this way, is that presence and that moment of human interaction cannot be achieved in a way that doesn't feel, well, a presence wouldn't feel transactional, but those questions you mentioned won't feel real and legitimate unless you are able to show up confidently and just be in the room and be locked
100%.
in. And that's what I'm tying together, is that if you don't have that expertise, if you don't have all of the building blocks, if you don't have the ability to do anything, to do almost anything or to cover all your bases, you shouldn't ask those questions, in my opinion, because it's going to be awkward and you're going to have to put all those worms back in the can. And also it's going to feel odd to you and you're not going to be able to just show up and be comfortable. So I think that's the thing that has finally clicked for me over the last year, is just the connection between it's not just about asking the right questions. It's not just about showing up and be I'm going to just be human with you. That human moment comes from experience and from expertise and from knowing. Confidence. Yeah, it comes from knowing. I think about new hires here. I think about me running a sales call versus a new hire running a sales call here. There's a huge difference. I know, the back of my hand, what we can and can't customize. I know what we can and can't do. I know what I can probably convince you we should be able to do if the deal is big enough. So I can walk into any conversation and I can just show up and listen and ask questions and be curious and explore and come to the end. And I know what I'm going to do. I know how I'm going to take that away and move it to the next step. Whereas a new hire who doesn't know all those things and who doesn't feel as confident in all of that can't do that. And that's what I'm saying, is that it has to be salesy. If you don't know that you have good solutions, you have to sell something, because you can't just show up and be tell me about yourself. Tell me what you care about. Oh yeah, let's talk. That would be very odd to do that and then be and here's my model portfolio. It's a 60-40. And by the way, did you know that I picked this manager for this reason? And I have a track record of success and I have a CFA on staff. Those two things don't match. So you have to do all of it. It's why we have to build seeds the way we're building it, because you can't have one without the other. You can't just ask the questions and not have the execution, and you can't just have execution and not show up in a human way to maximize the impact on your clients and actually make a good experience out of it.
We agree, and I'm going to.
Do you get what I'm saying?
I'm going to double down on what you said. It's an alley-oop situation. To your point about confidence, and being able to be present to do all that human stuff, to reiterate, yes, the expertise has to be there so that you have the confidence and you can be doing that human stuff really well. Part of my point is that sometimes I wrote a LinkedIn article, the title was "Clients Want Personalized Investing." So they want that human experience stuff around investment management, but advisors are still failing at the fundamentals. And the point is, in some situations, advisors are sort of leapfrogging the fundamentals, in part because they're not super comfortable in building those fundamentals around investment management. And we'll unpack what we think we actually mean by the foundational things, the fundamentals within investment management. But they're jumping over that to get to the human stuff because that's a more comfortable way to convey value. We would argue it's really a mask for not being, layering on top of the foundation, the humanness, and those two things coexisting. And that is the point. They have to coexist. And even, again, we see advisors who, I want to do values-based investing. I want to ask these questions about thematic areas. And we want to empower them to do that. But we also, to some extent, have to backtrack and say, you should only be doing that if you can confidently walk in the room, because all these different components of how you build portfolios, how they get managed, things that Seeds as a platform wants to empower them to be doing, these foundational things. But let's not even get to that deeper stuff, that personalization layer, until we're super, super clear on how do you build an asset allocation? How do you rebalance portfolios? How do you do tax loss harvesting? How do you locate assets across account types? All these different foundational components. How do you do it systematically? And we can.
How do you explain those things to clients?
How do you feel, to your point? Like, do you feel like a new hire that's hearing them and kind of understanding things like tax location for the first time today? Or you've been in the biz and like you can walk into the room so comfortably to go do the humanness stuff because that's old hat. I just have that. It's in my DNA. And again, that's why this job as advisors is so hard. You have to have both. So I don't know. We can maybe unpack. I rattled off a few just then, but like what those foundational things are.
If you feel significantly more comfortable engaging in planning discovery than you do engaging in any sort of deep investment discovery, or when proposing a plan versus proposing your investment services or solutions, then that's probably a sign, basically, that you know that either you're not sure if you're doing it well enough, or you don't know necessarily what good looks like. I have been kind of on a little tangent about this internally. Obviously, I get really excited about ideas and about I just get really excited because I'm like, this is so, with everything changing, this is such an opportunity for advisors who want to show up in a human way to just find firms. And there are great it's not just Seeds, but other firms, especially with AI coming up, that can really help maximize and improve all of the back office and behind the scenes, the ways that your firm works behind the scenes. I think that it's just very important that the advisor not just delegate it, but truly understand why it is the way it is, what it is. Like that's the thing. We're not saying go outsource it and then just show up and be human. It's very important that those two things connect. There is excellence in how you're delivering this and what you're actually providing as a service, but then you also understand it, and you don't have to be the one doing it. You don't have to be the one trading and rebalancing every day and doing all that stuff. And in fact, we think you should not be, but you should understand why those things are important, and why do you as a firm, why is that what you deliver? So that it could be clearly explained. There's so many examples of firms who are really good at selling and lack consistent execution on the trade operations front, or even with how models are delivered, or how accounts are allocated, or how that ties to the plan or doesn't tie to the plan. There's so much inconsistency there, but they're great at selling. And then there are firms who are, I think, more insecure about it because they know that it's shaky. They know they're on shaky ground. They don't really know what to do about it. And they kind of have to just keep going. And so they lean so hard into planning because it's where they feel more confident. And then they're kind of just sideline, oh, let me just do this quarterly. I'm just going to check on it. I'm just going to make sure it's good to go. Or I'm going to put them in low cost Vanguard funds or whatever. And that's I would argue that's actually way better than going off and selling something that you're not you're selling it hard and you're not really doing it well. I think that's better. I just think that it could be so much better. And a lot of the reason it's not is because it's really hard to do. And that's why we're building Seeds, is to be able to make it easy to do that, to make it easy to ask those questions and then implement something that actually makes sense on the back end, and then talk about it forever, ongoing into the future.
Yeah, I think that there's an ironicness to the fear of, I'm not entirely sure how I'm consistently implementing portfolios at the household level, at the account level, how to talk about it, the rationale behind how I'm building them, let alone before you even get into how am I actually systematically rebalancing, tax loss harvesting, raising cash. We talk about all the time, the amount of returns dispersion that's unintendedly happening across books of business. And frankly, it's because clients aren't aware of it. But we always joke, like, you put two clients within some of these firms in the room together who are supposed to be in the same portfolio or similar given their risk profile, and their returns are not the same because there's not systematic things happening within the business. It's pretty scary. It's pretty incredible, what we see sometimes. And what's interesting though is then there's hesitation on the other side of that coin of, and you just brought it up a second ago. Well, if I have a platform solution that actually does it the right way or helps me to accomplish these things, and I feel more confident in these foundational aspects of investment management, but I have a third-party system, quote unquote, third-party system supporting me in that, then am I really delivering the value? And I think we sort of always need to fight against that of, the answer is yes. Because if right now you're not, then right now you're not, right? If you're not actually confidently, again, delivering what is a goals-based framework to put people in the right portfolios, how am I locating assets? How am I doing tax loss harvesting, raising cash, rebalancing, all these foundational things that you need frameworks and consistency around, then the primary goal should be to solve that, right? Like, and if it's not something that you manually can do, which you can't, then that should be the North Star. How do I actually solve this foundational problem? And you hit on too, like, there's different ways of masking the reality of where those things aren't happening the right way. We see it in different forms. You see it in kind of obscure, silly narratives around the value proposition of investment management and, like tactical reallocations that make no sense, but that's the story. We've written about this too. I'll try not to go on too much of a rant on this topic, but the just complete, we don't do it here. We don't do investment management. You can do it yourself. This whole movement around DIY, sort of pretending like appropriate, proper, effective investment management isn't fundamental to comprehensive financial planning. It's just a thing that's run rampant in the industry, in my opinion, is a function of a lack of confidence and a lack of systems to be able to deliver it in an effective, valuable way to clients. And there's different sort of maskings. And last point, the jump to the humanness is another mask, right? The jump to, I'm just going to go deep on talking about values alignment or talking about, personalization in some form, can also be a mask. And we have to guard against that and say, you 100% need to be there. That's really what, investors expect of the experience around investment management, but not if you're leapfrogging or jumping over these foundational things. And they, again, keep saying it, they have to come together. You have to be doing both at the same time.
Yeah. Yeah, for sure. So I don't know where you want to take it from here. Do you think we should actually go through some of them? I don't know if we should go through like actual technical details of exactly what we mean, or if we should just more so talk about some of the trends we see across the industry.
I think we can rattle some of the specifics off and just kind of talk through it without getting too in the weeds. And I've mentioned some of them already, but we'll start with, like, you think of like the base layer foundation of an investment management framework. What clients get what portfolios, meaning asset classes, which ones at what mixes to which people. A lot of firms have no framework for that. No sort of logical, Mr. and Mrs. Smith walk in the door. These are the inputs related to goals. what portfolio is coming out the other side, right? So having a basic framework, the industry was kind of built on a risk tolerance focused framework. We won't go too deep here because we could spend an hour talking about this, but that may not be a great way to actually build a portfolio from a goals perspective.
Well, what ends up happening, just because I can't not, but what ends up happening is that you get a bunch of tolerance assessments, or even like some of the like tolerance / capacity number assessments, and then you have like a couple models, but you don't adhere to it strictly because it doesn't actually connect to the plan, and the plan might require something, or maybe the client's young, or maybe the client's old, and so you have you just see a lot of like, yeah, we do this to check the box for compliance. It's really, that's what we're doing it for, but we do have to make a lot of exceptions because it doesn't actually match what they need to do.
I mean,
is what ends up happening.
Think of the amount of conversations we've had, even recently at Future Proof, and we talk about an input-output framework. So just the foundational, what is the asset class mix at the beginning of a relationship with a client, and what are you basing that on? And the answers are so often, well, we have a conversation. Okay, conversation about what? What information are you gathering? And then what is the filter through which you push that information to determine what's going to come out the other side? You can't just sort of course, there's always art and and investment philosophy, and there's some squishiness, qualitativeness, but it should be on the edges. It shouldn't be the entire framework to say, oh, I have a conversation and we pick one of these 5 or 500 models, but they're all sort of Frankenstein models. And, sometimes we do this, sometimes we do that, whatever. That's the foundation. How do you actually build an asset allocation for your clients based on something? At least have a philosophy and framework. Hopefully it's some sort of goals-based framework. So that's like baseline 1.0 stuff. Then it's how do you actually, so now post-implementation, because you can think about like, my step one is I ingest information and then I figure out what to put my client in based on that information. But that's just step one. Then step 2 to a million is now they're in the portfolio. And how is that portfolio managed across time? I think I already said this earlier, or now I'm just like mixing conversations in my head because my brain is mush. But the returns dispersion that happens across firms, I think I already did say this, that happens across firms because rebalancing isn't systematic and it's random. Things like, we talk to advisors and it's like, well, how do you raise cash for clients? And it's like, well, I have like a calendar invite or a calendar notification and the bell goes off. And then I go in, or I do tax loss harvesting on that basis. Or maybe I don't do tax loss harvesting at all. Or maybe I do it once at the end of the year. All those little pieces of the maintenance of a portfolio across time. So rebalancing, tax loss harvesting, how cash gets deployed, how cash gets taken out. If you don't have a framework for each of those things, a rule set to determine how that's going to work, then the second you don't, the lack of consistency that permeates across your book of business is like an infection. By the time, you get 10 years into the business and all of a sudden you zoom out and look at your book of business and clients who should be in similar profile solutions aren't, and you've created unintended chaos. So those are like, again, maybe we don't get too more in the weeds, but if you think of the 2 layers, it's like, how do I get them? Step 1, what is the portfolio they should go in? And then it's all the framework stuff post-implementation on an ongoing basis.
Yeah, and there is going to be variation for other reasons, like maybe there's legacy holdings, maybe there's budgets that need to be in place, maybe people are transitioning, and there's trade-offs that different people want to make for different reasons. So people could be in the same model or targeting the same model, but be slightly different. But it shouldn't be just because there's not a systematic way to do basic things. It should be for a reason, and an understood trade-off has been made about that for that reason.
All of those components themselves can have rules. So like just to double click on tax transition of legacy positions, this comes up so often. And it's one of those things that, again, it's just kind of brushed to the side because clients aren't quite clear on what's optimally happening or not, because it's a little esoteric seeming and somewhat complicated and somewhat confusing. But clients have taxable money. They have a bunch of stuff in that portfolio. And maybe your recommendation is to move into a different type of portfolio, and there's capital gains in that original portfolio. So how do you get from this one to that one? And we hear advisors talk about, I look in the portfolio every once in a while and see if there's losses I can sell in the legacy positions and try to move it over to the new portfolio. Okay, so you do that within each account. You do that how frequently? Those accounts all have different positions in them. The markets go up and down in different ways on a daily basis, not whenever you've put a calendar invite for yourself to look at it. These are the simplest way to think about it, and like where we sum this all up to the expertise around investment management, is systems and rules are a good thing and don't take away from your value. They just actually help you deliver on it. Something like unwinding legacy stock positions from a portfolio that has gains in it should be a rules-based framework that doesn't require you as a human person to like put your finger in the wind and guess when the Joneses Apple stock position is up or down.
Yeah, and we won't go deep into this, but I find it interesting, and this is something that I've been thinking about a lot, this trade-off. There's a lot of focus on the advisor's experience when we're having these conversations, and am I willing to trade full control to systematize something and to set rules and to let it run and to let those rules run the show? And a lot of advisors we meet, they prefer a worse offering with control over a better offering that is systematized through technology and or outsourcing to experts for these things, because they want to know exactly what's going on. They want to know why every trade was made. They want to know, when. They want to know everything in case the client happens to call them. Or they like it. They find it fun. I think the thing that gets to me the most is that I really encourage every advisor, and we know a ton of advisors who are like this. This is not to characterize every advisor this way, but to think through the client's perspective on this, to think what they would want if they knew, if they were educated. And I was just saying this morning, I saw a Reddit thread, me, and shout out to the person who sent me this. I love a good Reddit thread, where someone was like, yeah, if you're just starting out and you're going to do investment management only, make sure you don't get any clients who are well educated in this, in personal finance and investing, because it'll be a nightmare. You just want to kind of set them in a low cost Vanguard portfolio and forget it and kind of look at it every so often. And that's how you can really like accumulate clients. That is so upsetting to me. Because if this industry is going to exist into the future, it's going to exist because people think through their offering through the lens of the client and not through the lens of the advisor. This is not supposed to be just someone's fun thing that they like doing. It's not supposed to be like, I just love investing, so I'm going to go be an advisor so I can collect AUM so that I can kind of just like put it in models and I can watch the markets and send out a market commentary. It's not what it's supposed to be. These are real people who are seeking consultation from experts. And if you're uncomfortable letting go of control, and that's about you and you working through that so that your clients can have a better experience, and I told you I wasn't going to get like this in this call, and here I go. But if that's the case, you should think about that. Because I said this to our marketing team today. If your client goes on ChatGPT and says, my advisor is charging me 1%, what should they be doing? What are the best practices for how they should be managing my portfolio? And gives ChatGPT some parameters. What will ChatGPT say? Will ChatGPT say they should at least harvest once a year in your taxable account and make sure that they look at it at least once a quarter to see if they want to do anything different? No, ChatGPT's not going to say that. Google's not going to say that. Like this is what I'm saying. I feel like people just need to think about this for a second. We have all this technology. We have all of these experts who you can outsource to. Why? They don't care if you're pushing go on the trades. They don't care if you're the one auditing it. That's not why they're working with you. Just to be perfectly honest, maybe there are some more legacy clients you have that are older who yes, they bought into you being their trader, maybe. But I can tell you right now, it's not what I would be looking for. It's not what my friends would be looking for. It's not what my even slightly older than me, my cousins, my sister-in-law, my brother-in-law, that's not what we're looking for. We want to talk to somebody And we want to build trust with them, and we want to believe that they're doing their best and that they have the best solutions and the best services at their disposal so that they can get me to my goals. That's it. I'm off my soapbox. I get so excited. I get so upset about this.
It's good stuff. I was listening to it's my last sort of analogy. We can wrap here, but the Pete Buttigieg, a random interview I was listening to with Pete Buttigieg, transportation secretary previously, not currently. He was talking about this whole concept of control and wanting control, even if it's at the sake of worse outcomes. We are so wired to want to hold on to the wheel because we feel like we're in control. He pointed out there are as many deaths from car accidents a day as people who can fit on an airplane. So imagine once a day there was an airline crash, right? That's the reality of the numbers. But when you talk about autonomous vehicles and allowing the robots to use the machine to not die behind the wheel of a car, we're all in a, you see one autonomous vehicle accident and we're so hardwired to be like, see, I can't let go of the wheel. There's hundreds of people who die in car accidents every day, and we have to continue to hold on to the wheel despite logically knowing it doesn't provide better outcomes.
Yeah, they died in control. That's less scary.
It's an ominous way to...
Well, that's what it is. Like, that's what it is in this smaller, way less scary use case. You can not grow in control. You can deliver a worse experience in control. You can be uncomfortable in control. You can do all the same thing, like you can have bad outcomes and have control. And some people may pick that, and that's perfectly fine. Like, to be totally fair, it's perfectly fine. You know what I mean? But for me, it's like, if you're really trying to build something that's an amazing experience for your customer, then you should maximize your strengths. And where you don't have a strength, or where it's impossible to manually do something, I think you should explore other options and be open to letting go of a little bit of control. And there's ways to still be in control. That's the thing. Like, I'm not saying don't decide the allocation, don't set the budget. All those things should be in your control. I'm talking about like push and go on individual trades. I'm talking about that level of control and like full-blown.
Yeah, and understanding what it all is and how it works and why that's the value, right? I think what we're saying too is like the culmination here is, to tie this together and back to your original point of being present. If you can have these baseline foundational things where you have confidence in that expertise and there's a system that's supporting you in delivering it, that's real confidence to then be in the room. First of all, it's real value. To the control point, it's not, the client doesn't see or care about any of the systems behind the scenes. They care about the better outcomes that you know how to talk about. And then you're in the room and can be present to layer on this personalization and deeper experience around investing. Again, to sum it up, that's how those things need to be tied together.
So did we go too off the rails? Did we try? I went a little. You went a little long. I went a little off the rails. I get too excited when we talk about this.
Is this even an advice business podcast episode if we don't go meaningfully off the rails?
It's true. If it's just the two of us, yes, 100%.
All right, we'll leave it there. We could rant on and on and on. Here's to another year. We'll look forward to the next International Podcast Day. We'll actually record on that day like we were supposed to this year. Thanks, everybody, for listening. If you haven't checked us out, go check out Seeds, www.useseeds.com. We'll see you next time.